Well, hello there, traders and friends right around the world. It is James here with you on behalf of Pivot Point Trading, bringing you this very important Thursday afternoon market recap. I've had this trigger drawn on my Dow Jones Industrial Average chart for quite some time. 17,543, as you can see on my screen down here, has been our bearish entry on the market. If in fact we were going to break, close and hold below this level. On Tuesday, we saw that long lower wick develop during the intraday price action. I believe the intraday movement was either 570 or 670 point swing intraday. It really suggested that we were setting up some form of a hammer candlestick as at the close on Tuesday, and the likelihood and probability of seeing this market oscillate back up to this resistance level once again was quite high. However, on Wednesday, that was completely negated. You can see this long day Morobozu candlestick, which set up on the Wednesday, really diminishing or at least retracing or retracting any of those expectations and hopes of seeing that next oscillation and cycle back higher. Here we are as at Thursday. We started the day exceptionally strong. We pushed back on up. This candlestick at one point during the day was a long day white day candlestick. It would have reflected that of a tweezer bottom, a very bullish signal, a 2-day candlestick pattern. However, the selling pressure once again flowed back into this critical area on the chart, and it has left us with what we call a shooting star type of candlestick. This is a very, very, very bearish type of trade signal, a very bearish chart or candlestick pattern. It's telling us once again that there remains selling pressure at this old support level. On face value, it really looks as though we've essentially broken below support. We've retested that support level, that neckline on a couple of occasions now, and we're seriously starting to see that now act as new resistance. What these candlesticks suggest, as at Wednesday and Thursday, is that it's almost a guarantee that this market, or at least the Dow Jones Industrial Average, is going to sell off at least down to 17,210, give or take a couple of points, obviously. We need to allow a little bit of leeway, but I want you to pay attention to these old support levels in November, December, and February 2015, which once acted also, if I can change my color here, as resistance in July and September 2014. It is going to be a very important macro support level for the Dow Jones Industrial Average if in fact it retraces down to this level. As I sit down and do this recording, it is at the close on Thursday afternoon. I have a suspicion, I have a feeling that we are going to close Friday's trading session particularly lower. It could be maybe just a couple of points, maybe a couple of hundred. But as I look forward to this week's Pivot Point Pro Analysis class, I'm excited to bring you the update looking forward into the market. We've really been quite patient during this entire topping type of pattern up here over the past 4 weeks. I'm excited at least to give you my thoughts and suspicions on where this market is moving over the next 2 to 3 weeks and what to expect. I'm not going to draw it on the chart right now for you. I'm going to let Friday's price action develop first of all, but I just wanted to say if you're interested in the current price action, the current structure, which is taking place in the markets, and it's got you a little bit suspect on the market health itself, it's an exceptional class to get in and to hear my thoughts and my technical analysis on the markets to find out where in fact we are moving further into 2015. There are a lot of bearish types of signals starting to set up, but we haven't made structural cracks, so to speak, or structural damage, which really permits us at this particular moment in time to really be considering any type of bear market at this particular moment. Time will tell, however, but we certainly are starting to set up breaches of technical support or breaches of technical structure, which is very important to the at least intermediate and primary health of the market. Not to mention, if I change to the weekly, this long-term bullish trend, which has been in effect since the 2009 lows, which has established this 6-year bull market as it stands. So more on that over the weekend. Outside of that, today, Apple has had quite a big breakdown below that 122.47 trigger. I was speaking to a couple of people yesterday, actually. They said, I just can't believe Apple has sold off. They were surprised, first of all, that Apple made the break below our bearish trigger over here at the beginning of June. It actually cracked that 100 and it hit our first target here at 123.68. Well, today, on top of that, we've broken below 122.47 and we are very close to that 118.71 trigger. We came, actually, within a couple of points of it today, If you have a look at the top left-hand side of my screen right here, I think the low, it came in at 119.22, so we were about 50 cents away from our target. There's a very good chance that we are going to see downward continuation in the price of Apple, and we will hit that 118.71 target over the coming days. Outside of that, Baidu had an impressive gap up. You should have been out of this trade. You had two opportunities to get out of this trade at 183.90. I do think we are going to oscillate back down and hit 183.90 again. So if you are holding this trade for whatever reason you chose to do so, you will, in my opinion, be blessed with the opportunity to re-exit or to get out of the trade again at 183.90. I wouldn't be holding on to Baidu any longer than what I have to. Obviously, a lot of turmoil, a lot of volatility flowing into the Chinese markets. Caterpillar, again, similar type of trade. You've had three opportunities now to leg out of Caterpillar for some nice profit. 84.61 was the original entry. Re-entry at 83.47. We hit our first target at 81.93. We still have lower targets on Caterpillar, which I believe we will hit. It's something which I've been eyeing off ever since we put in this low over here and we started making these highs over here. It was always my, analysis and focus and intention that we were setting up some form of a channel. That really looks to be the case right now, doesn't it? I mean, we had this little false little high low, but now we're starting to really oscillate back down, and 77.83 is a really reliable target looking forward. Very bearish activity taking place on Caterpillar. Also, CVX. Again, yesterday when I spoke to a couple of people over the phone, they were really shocked and surprised at just how low or how big of a sell-off CVX has actually gone through. It doesn't really come as much of a surprise. It's really in a defined downtrend, and we're just simply breaking macro support. There was a good chance and a good likelihood that we were going to bounce, and there is a good chance that we will at some stage bounce from these lower lows. But until we get that trend reversal, you have to be looking at CVX with some form of bearish perspective moving forward. Outside of these trades, I mean, Goldman Sachs has got the setup for a bear flag continuation. It hasn't broken yet. IBM has been a little bit reluctant to sell off. It's really held this type of movement quite nicely. But I am optimistic for that rollover to continue and to see 159 hit over the coming days. More on that over the weekend. And also, I mean, what else do we have? Netflix is still holding up relatively well. It hasn't broken down below 635. 648 was the original entry. We're here at 670, so it is holding up, but I'm expecting this to roll over very, very soon. Tesla's moving or looking exceptionally bearish as well. It's starting to break some support levels, which, you know, is important to note. We'll see how this holds up on Friday, depending on what the markets do, but I'm excited to bring you trade analysis on Tesla. And obviously today, Walgreens has reported its earnings. I spoke over last weekend and said, look, I'll give you an update on this particular trade. If a genuine trade presents itself, a little bit of a surprise, really. We've seen some form of a positive report, or at least interpreted by traders and investors in positive light. We did gap up $3.70 or so to begin the trading session. We sold off, but we held some important levels. Prior to the earnings report, we had this downtrend. It really looks as though we've actually back tested it during Thursday's trading session we've held, and it may lead to some bullish activity back up to our original target of 91.69. Given where the market stands in these two previous types of candles, having a look on the S&P 500 during Thursdays and Wednesdays charting activity, very similar to that of the Dow Jones, and of course the NASDAQ really looking quite bearish. To sit here with great conviction behind a bullish trade on Walgreens, it's a little far-fetched. I won't be placing it, and also you've got a target which is exceptionally close to any form of break of the higher type of trade moving forward. So unfortunately in this particular trade, it was out of a bullish earnings report, but however, it isn't really going to help us for an immediate trade on Walgreens, given that we are at resistance and the market itself is looking quite bearish. I'll give you more of an update on Walgreens over the weekend, but really right now it's best, if you feel uncomfortable, to just sit on the sidelines and wait for a better opportunity to re-enter into this market. I will give you a very important and very clear market analysis. If in fact we get down to this level, 17,210, all the way down to 17,000, that is where that primary bullish trend line will start to interact with price action if it does get down that low. Outside of that, ladies and gentlemen, it is the Thursday afternoon market recap. It is James signing off on behalf of Pivot Point Trading. Stay safe out there, traders and friends around the world. There will be an ideal time to enter into this market when we have much more clarity and certainty of the overall trend direction. At the moment, it really looks as though we're starting to potentially break down. A lot of those answers or questions will be answered at this lower level right here. So have a fantastic Thursday evening, everybody. I'll see you all in pro over the weekend. That recording will be online first thing Saturday morning US time. All the best, traders and friends. Goodbye.